Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly sector review for February 2nd, 2024. Starting off with BOTS, the Artificial Intelligence ETF. This ETF did close higher for the week, up 0.65%. However, this did underperform the S&P 500. You can see the relative strength down here. This ETF is still underperforming the S&P 500 at this point in the rally, and really shows the mixed nature of artificial intelligence stocks during this rally, where some of them have participated and many others have really struggled, especially since around December 2023. So around this time frame is really where the divergence started showing up in these stocks. And that same divergence is what I talked about in the timing model document that's available on the website for all members. And that's really an important document to read and understand, because I think it gives some good, background on what tends to happen when the market is going into a correction, and that's where you would be timing a high in the market, and what happens when the market's starting to come out of a correction, and that's timing a low in the market. And when you're timing a high in the market, one thing that tends to show up is stocks in an individual sector tend to start diverging, where the weaker stocks simply stop going up, and just the stronger ones are the ones that are still going up, that are left powering the uptrend higher. And then all of a sudden the market goes into a correction, everything starts to pull back, and at that point there's really no way to outperform the market, because almost everything's going down. So a precursor that leads into a correction typically is when you see these divergences within an individual sector. So that's been showing up for multiple weeks within the artificial intelligence stocks. The semiconductor stocks were up last week, but again, even after a strong week 2 weeks ago, a lot of the semiconductor stocks acted pretty bad this week. Intel reported earnings last week and was hit hard, and AMD actually was sold off after earnings earlier this week. It was able to kind of move back higher a little bit, but there's lots of warning signs there. Many other individual semiconductor stocks are not acting well. As I wrote in the newsletter, there's just 5 semiconductor stocks that are up more than 5% this year, and really the entire sector has been carried higher by NVIDIA and AMD. So lots of internal weakness, even though the sector is going up. Home builders, same type of thing, where there's 3 prominent home builders that are starting to sell off on volume now. This showed up in the sector last week. It was able to bounce back this week, but there's only a couple of home builders that made new highs this week, where other ones diverged lower on heavy volume. So lots of internal weakness showing up in home builders. Jumping over to the US dollar, this market was actually down this week heading into Friday, and then the jobs report really goosed the US dollar higher. However, the US dollar is not, back in stage 2 quite yet. It's still back in stage 3 now, right around the 30-week moving average, but still need to see what happens here. If it does roll over, then that could help the stock market, but really it's mostly going to help precious metals and potentially Bitcoin, because the dollar won't be a safe haven, especially if the stock market's correcting. So this is still a key market to watch. The dollar really had trouble rallying all week until Friday after the jobs report. So we'll see what happens with the dollar heading into next week. Gold was actually getting set up for a breakout this week. You can see the volume was above average on gold. But then again, the strength in the US dollar at the end of the week really caused gold to move back down. I think gold is still in great position here. It's still holding the 10-week moving average. and it's still on the cusp of a breakout to all-time highs with no overhead resistance. So the key really, as I talked about in the last video of the newsletter last week, is seeing gold start to outperform the S&P 500. It did actually start doing that earlier in the week, but again, with the jobs report on Friday, it was slammed back lower. So we'll see if this starts to turn up again heading into next week. Silver, again, still underperforming the S&P 500, but didn't really sell off to a large degree this week, even with the strength in the U.S. dollar, and still holding these important, support level. It bounced off a support level last week, so we'll see what happens with silver. The gold miners were down on the week, but just slightly, and then silver miners actually were up again this week with silver down. So again, we're still holding support here. We're looking for a breakout, and we need to see relative strength against the S&P 500 turn up. So there's a lot of mining stocks that are actually holding their lows really well, even though the metals have been under pressure. So we'll see what happens with those. But I think that, again, it all hinges on the U.S. dollar. If the U.S. dollar does roll over, this sector is in great position to break out, and vice versa if we do see strength in the U.S. dollar. Now, bonds are interesting because back in March 2023, heading into the first regional banking crisis, there was a massive bid for bonds as a flight to safety during that mini banking crisis, and then bonds completed a major top in April, rolled over into a downtrend, and this is where the market started acting weak around here. The S&P 500 moved into a correction around here, when bonds were really selling off and interest rates were rising. So going back to that flight to safety, huge volume in the TLT ETF this week, biggest weekly volume ever in this ETF. And if it wasn't for Friday's jobs report, this would have closed at the highs of the week. So this could be a very early sign of a flight to safety, and especially if the regional banking crisis accelerates heading into next week. If we see more heavy volume in bonds, then that's what's happening there. And again, this led to a major move lower in the stock market too in March 2023. So perhaps a flight to safety in bonds. Looking at those regional banks, they sell off on heavy volume this week. This is a big bearish engulfing candle, breaks the 10-week moving average. And if we move below the 30-week moving average, then we're going to be back in a downtrend all of a sudden, or back below this major moving average in the regional bank ETFs. This was the major panic in 2023. You can see the monster volume it sold off on back then. And then the regional banks finally put it in a low in May. This is where the stock market got going, where artificial intelligence had a monster rally right around here, right when the regional banks bottomed on heavy volume. So seeing this heavy volume selling all of a sudden in regional banks, this is a major warning sign. Again, with a stretched stock market and something like this happening, this is like screaming danger right now. Like if there's more heavy volume selling heading into next week, then the market could really come off the highs very quickly, and a correction could be, coming very shortly afterwards. So key sector to watch next week is how the financials act, especially early in the week. And the major banks, they did make a higher high this week, but only JP Morgan and Citibank were the ones that were making those highs, where even Bank of America and Wells Fargo came off the highs for the week. So this is an important sector to watch as well, where if we see more weakness, this is going to start to roll over. Notice how the relative strength down here against the S&P 500 is already starting to decline. That's a potential warning sign as well. So if banks sell off next week, that's a big negative for the stock market. Finally, turning to cannabis stocks, this has been a major winner You can see the huge volume coming into the sector over the last month or so. A couple stocks that broke out into stage two that were in the newsletter. TCNNF is one in particular that's been a monster winner. But this is a classic stage two investor breakout on heavy volume. And if the market does go into a correction, this is a good sector to watch potentially after a correction for more trading opportunities, because we're coming out of a major bear market here. So overall, lots of things going on in this market. If you want to boil it down to one sector, I would watch the financials heading into next week. If there's more trouble there, then the market's going to be under major pressure, especially with how few stocks are participating at this point and how extended the market is during this recent rally.